Research at OrangeBTC. Please welcome him on stage. They will be also joined by Matt Cole, CEO at Strive, and also last but not least, King Uy, CEO at Treasury. Please give them a big hand and be louder. The floor is yours.
Thank you so much. Guys, great to be here with you. Thanks for joining. Thank you all for being here. Hope you're having a good time in Abu Dhabi. Again, my name is George McHale. I am the Managing Director at Bitcoin for Corporations, where our mission is to accelerate corporate Bitcoin adoption, and we do that with partners like these gentlemen on stage. So why don't we start with just a quick round of introductions, starting with you, Sam. Share a little bit about who you are and what you do.
Yeah, my name is Sam Callahan. I'm the Director of Strategy and Research at OrangeBTC. We are the largest Bitcoin Treasury company in Latin America. So we currently have 3,720 Bitcoin. And our mission is to accelerate Bitcoin adoption throughout all of Latin America.
Amazing.
Matt Cole, Chairman and CEO of Strive. So we are, I think, the 14th largest Bitcoin Treasury company. We are the second Bitcoin Treasury company to IPO a perpetual preferred equity, SEDA, which was about a month ago. So deep in the world of digital credit that y'all just got a great lecture on.
Amazing. King.
My name is King Uy, founder and CEO of Treasury. We're the first Bitcoin Treasury company in Europe to be listed on a main European exchange. Did a private round and have 1,111 Bitcoin.
Awesome. Well, we have the privilege of following Michael Saylor, which is always fun, but we are talking about the differentiation among Bitcoin treasury companies and the different strategies. And I think as this space has evolved, we've seen different types of strategies be employed, and I think we want to tackle this in our conversation today in a few different buckets. We got regions, we got operating sort of strategies, what they actually do, the regulations that they have to navigate. I think those are the three main ones that I would look at. So let's start with regions. So Sam, you're in Brazil, Latin America. What are some of the unique things that you guys have experienced as you guys have implemented your strategy?
Yeah, I mean, OrangeBTC is not just long Bitcoin, we're also long Brazil. So there's like inherent differentiation with everything we do. It's a different currency and inflation regime. It's a different regulatory environment, like you said, different tax treatments, different investor base with different mandates and constraints to accessing spot Bitcoin. It's a different investor psychology. So in developed markets, it's more about upside and portfolio optimization with Bitcoin. In Brazil, it's about survival from currency debasement. And so all of that just creates a very differentiated company compared to other treasury companies simply because we're listed in Brazil and there's really not that many options in the entire Latin America region for getting exposure to Bitcoin through a publicly listed vehicle.
Yeah. Definitely. I want to jump over to King, and I know you're navigating some unique challenges in Europe. Can you share a little bit about what you guys are seeing over at Treasury?
Sure. I'll start on the positive side. Obviously, the Netherlands was actually the birthplace of modern capital markets, first joint stock company, first exchange. It's a very deep market, very advanced players, great market makers, infrastructure, etc. So it's a perfect place for a Bitcoin Treasury company, and also very natural for sort of what we call the next part of the digital golden age. On the other hand, the European landscape as a whole is certainly less, I would say, crypto adoptive or Bitcoin adoptive than certainly in the US or other markets. So a big part of that, I think, is education. It's dialogue. It's making sure that whatever you build is according to best practices with the best people, et cetera, et cetera. So we're trying to be an integral part of that.
Definitely. And Matt, so Strive has done one of the more unique things that we've seen in this space, and that is acquire another Bitcoin Treasury company. Can you share a little bit about your strategy and sort of how you guys came to that decision?
Yeah, so it started with having a differentiation around digital credit, around amplification, turning down convertible notes, and then with that differentiation, there became other companies, and so similar that I think we're more struggling to find a true differentiation, a true long-term strategy. And so for us, when you combine, you get two benefits. One, you reach a level of scale that's difficult to achieve, right? It's not easy to go raise 10,000 Bitcoin. Like, not an easy thing to do. And so we're, at the time we were about 5,800 Bitcoin. Now we're 7,500. Post-Semler would be 12,500. And you start to reach a scale where the cost to operate a US capital market strategy, which probably different than international strategies, becomes de minimis relative to the size of the balance sheet. And so that becomes helpful in providing digital credit. So I mean, strategy has how many 650,000 Bitcoin, but when you don't get a level of scale, you can't really go launch a preferred equity instrument. And so we learned that. I mean, probably my view is in the US capital markets, you probably have to raise at least 200 million notional to actually do it, which is actually what we raised. And so I think we kind of raised about the smallest amount to get out there. So it's not easy to get through that door, but with Semler, I think we're stronger together and can really lower cost of capital, which at the end of the day helps us amplify Bitcoin further.
Yeah, amazing. One correction though, they actually have 660,000 Bitcoin. They just added 10,000 yesterday, which was crazy.
Big buy. Biggest buy since July, actually.
Yeah, out of nowhere. So that was fun to see. Okay, as we talk about how this space continues to evolve, I think what we've seen recently, the last 6 to 8 months, is the so-called pure play, Bitcoin Treasury companies come onto the scene. We've seen, some that are legit, and some that are sort of a flash in the pan, that are leveraging the momentum and kind of the excitement to try to pump their stock, and then you never hear from them again. I think that now what we're starting to see is the need to emphasize a significant operating business, that you are actually making money, that you actually have a real business, whether that's through creating preferreds or some other related or non-related type of company. Sam, how do you kind of view the evolution of the narrative around Bitcoin Treasury companies?
Yeah, I think you're starting to see what you said, the focus on having an operating company. For us, we wanted our operating company to be in alignment with our mission to accelerate Bitcoin adoption, which is why we did a reverse merger with an education company. Mm-hmm. And so we have the infrastructure of an education company that we could transform over time to generate Bitcoin content, Bitcoin curriculum, Bitcoin courses to help educate the market on not just Bitcoin treasury companies, but Bitcoin itself. So Brazil is a few years behind the United States and other developed nations in terms of just their understanding of Bitcoin. And so we wanted our operating business to help accelerate our mission to push that adoption. And that's why our CFO has experience running a public company in Brazil for over a decade, and that was an education company. And so we have a lot of experience in education and media, and as well as in Bitcoin itself, to kind of push that narrative and to be a leader and a voice in that region that's kind of devoid of resources like that. We've kind of been inundated with amazing podcasts and research reports and institutional grade analysis of Bitcoin, and that's what we want to bring to the market.
Yeah, that's incredible. I think that's one of the things that we hear the most in conversations that we have is this lack of education, like you said, about Bitcoin specifically. It's like we got to get people to understand what the underlying asset is before we even get them to start talking about a Bitcoin treasury company. Matt, I would ask you kind of a similar question. How do you see the narrative evolving from these pure plays to kind of what happens next?
Yeah, so I think as a Bitcoin treasury company, you have to start with the first principles. So like the basic question, what are you trying to do? And for us, we believe that Bitcoin treasury companies should set Bitcoin as their hurdle rate. So if you're going to spend money, then you should be thinking that money or that investment of time, effort, energy, operating business should be to outperform Bitcoin over the long run, right? Like Bitcoin's a duration asset, so outperforming Bitcoin over a month or even a year is a silly thing to say, because that's it might happen on certain years, it might not happen on other years or months, but over the long run, how do you make strategic decisions to outperform Bitcoin? And you start looking down the opportunity of business decisions, and you end up saying no to almost everything. Yeah. It's like, that's not going to beat the hurdle rate of Bitcoin. That's not going to beat the hurdle rate of Bitcoin. 90% of startups fail versus fiat. What do you think the percentage of startups that are going to fail versus Bitcoin? 95%. And so for us, that's what led us to focus on digital credit as our operating business focus, is that if you're underwriting Bitcoin and you believe that Bitcoin is going to go up 30% on average for the next 20 years or whatever you're underwriting, then digital credit actually makes sense to help amplify the Bitcoin exposure because your cost of capital is substantially less than that, and then you can hit the whole Saylor conversation of stripping down volatility and the great product that provides, and I think that's tough to beat, and I think that if you're not thinking about differentiation or focus in that regard, then still owning Bitcoin might make sense for your business. I mean, it's Bitcoin, right? But should you trade at a premium? Are you going to outperform Bitcoin? Those conversations, I think, become harder.
Yeah, staying with you, Matt, would you say that you're on a mission to create a better bank? We've heard Saylor talk about that. Is that sort of how you see Strive eventually being viewed?
Bank, insurance company, I think that the space is so nascent, it's so new. I mean, it's hard to remember this, but Strategy launched their first pref 9 months ago, right? I mean, it feels like in Bitcoin space, this is dog years. It's been like 5 years, but it's 9 months, right? And so as this evolves, I think we're going to see different ways to maximally monetize these Bitcoin treasury companies. I think we're in literally inning 1 of innovation. We'll see things that work, that don't work, but I think a foundation of Bitcoin and digital credit is something that will provide maximal optionality, especially when you look at Strategy or Strive, none of our Bitcoin is unencumbered, which means you have maximum optionality while still basically saying no to almost everything.
Definitely, yeah. And King, you guys have been doing some unique things as you execute your strategy. Can you share a little bit about how you view the operating business of Treasury?
Sure. I think first of all, it's interesting, as Matt said, the industry has gone so quickly, and we're now at a phase where you see these differentiated models evolving, and which model a company embraces depends on the market environment, the market you're in, the team, and a whole bunch of other factors, sometimes also investors and shareholders. And the way we look at that is when we launched our company, the first thing we did was we actually bought the Bitcoin Anthem conference. And that is sort of the North Star of education in mind as well, right? Overall Bitcoin adoption, and there's no better asset to have for Bitcoin adoption than a conference where you bring people together to do that. Over time, it's very important to evolve into a company that uses Bitcoin as a reserve asset for multiple functions. And we think in a broader sense, as a financial services company, right? I think it's too early to speak about banking, but it's certainly where it will go inevitably at some point. It all depends on integration with the financial system. If you think about being a structured finance company, issuing digital credit, that's obviously a very important component. And then on the operating side, there's other things you can do with your Bitcoin. Obviously, we see Metaplan being very successful with their options trading strategies. There's some very early developments in terms of Bitcoin collateralized lending, and we're exploring all of the above.
Yeah, nice. So one of the things that I thought was really interesting when we first started Bitcoin for Corporations, we partnered with Strategy. The initial conversations were them wanting to see other companies adopt their playbook. And I think this is pretty unique for Bitcoin, right? You don't see a lot of corporations wanting to encourage essentially what would come down to competition, right? In our space, we have the benefit of viewing competition completely different. So I'll throw this out to the group, whoever wants to take it. How do you see our role as leaders in the space to not only educate sort of investors and retail, but also companies that aren't here yet, companies that don't understand Bitcoin, and us wanting to see this accelerate? What is our role in educating just the average corporation about what's going on?
King and I actually just had a great example of this. We did a panel on another stage, and right after we got to the panel, someone that was looking to start a Bitcoin treasury company came up to us, and we had a great conversation. And part of that conversation, though, was the discussion that it's actually critically important we want these companies to succeed, because this is such a new industry. If you start seeing failure, bad decisions, companies blowing up, which probably happens at some point, but it puts a black eye on the rest of us that are trying to build long-term strategies, right? And so, yes, we're competing, but you really are going to win more by growing the pie here. So it's like, I want more Bitcoin than the next guy. I want to have more total return, but ultimately, if we're all winning, we're going to win together, and that's the greatest way to grow this. And so I think that's why you see this collaboration, why Bitcoin for Corporations took off. It's a fun competition. And we have differentiations, we have viewpoints, but it's like, my last business, like we were fighting like capitalism versus socialism. Like we were not on the same side of the table. Now it's like a bunch of Bitcoiners debating the best way to drive total return in a public vehicle, and that's a lot more fun.
Yeah, definitely.
And maybe to add to that, I think for me it's all about dialogue, and especially being in Europe, it's maybe a slightly different angle from, for instance, the US. There's more catching up to do. Such education starts with just individuals, just again the conference great part, corporations, also regulators, banks, traditional finance, and there's definitely interest, there's definitely openness, but the key thing is still education and make sure you understand it, and I think we can all be part of that.
Yeah, definitely.
I think if I just add, like, I think it's just such a nascent industry, and you know, there's people that we know each other. Like for instance, the MSCI news. Like you wrote a great paper. Like I had no problem sharing that because we need to educate the market about what we're doing here. And so it's about working together, and that really starts from the top with Michael Saylor and how he has been so transparent. And I think that motivates us all to kind of follow his lead and be transparent about what we're doing. We learn from each other, mistakes, what works, and how it implements in our specific capital markets. So it's such a young industry, and there's a lot of education that needs to happen, and we're stronger when we combine our forces and work together.
Definitely, yeah, and I'm glad you brought up MSCI. That's kind of where I wanted to go next, because to your point, we are stronger when we work together, especially when we're under attack. And it seems like there are attacks coming at us. I think Matt and I were talking. It's like whack-a-mole, like different angles, different attacks every day for seemingly no reason. And I try not to worry too much about the why. Like why did MSCI come out with this proposal to exclude Bitcoin Treasury companies? That's less important than like how do we fight back. And I think this is one of the things that Bitcoin for Corporations is really built to address. And then Matt, you did write a great letter through Strive to kind of push back on this, and we launched an action yesterday as well. I guess on the topic of differentiation, what do you see as happening with this specific proposal, and how it's kind of being presented as this is a different category of companies? They're trying to say that if you have more than 50% of Bitcoin on your balance sheet, that you're a fund. Like, how would you respond to that?
Yeah, so to start, so my background, I used to work at a large pension fund. We actually used MSCI indexes, and the pension fund actually was CalPERS, which if you don't know is the largest pension fund in the US. It's in California. It's very political there, so they have a board that's mostly appointed by politicians, and so we had all sorts of weird political pressures, and so we had to talk to MSCI about implementing like a political agenda in our investment portfolio. And what would typically happen there, and which I completely disagree with, but I worked there, so I had to help implement, is that they would create a custom index. So CalPERS would say they wanted something, MSCI would create it, but they wouldn't push it out to everyone. And that's really important with regards to Bitcoin Treasury companies. Probably everyone in this room is a Bitcoiner or learning about Bitcoin, but in the broader institutional investment community, some people don't understand it. They get in these, it has no intrinsic value or whatever. It's like, I don't want this, it's an investment product. But the answer to that is not to take out companies that are legally compliant operating businesses that have products, but actually to create a custom index that I think will underperform, have tracking error, whatever, but that's not, if it's a custom index, I disagree with it, but it's kind of like they're right. But when you push it to everyone, that actually substantially hurts capital markets, it hurts the cost of capital, it hurts innovation. I mean, obviously, like as us as a US investor, but around the globe. And then when you get into some of the details of how they would implement it, there's also a million workarounds. And so Bitcoin Treasury companies, if they really wanted to be in an index, could structure their company in a way to get around those rules, unless they're going to continue to play whack-a-mole. So it's like, just let them be in the market if they're a compliant operating company, and let the market speak. And it's like I think, as an example, I think digital asset treasury companies that aren't Bitcoin, I don't think they have a lot of value, but I don't think they should be excluded from MSCI. I think we should let the markets decide, free markets decide. If they have value over time, then they'll win. A passive index doesn't need their opinion, and it frankly doesn't need my opinion either. It's passive.
Right.
Hear, hear.
Yeah, I mean, and King, you spent a lot of time in your career in sort of traditional capital markets. What was your response when you saw this MSCI proposal? Were you surprised by this?
Yeah, it's complete discretionary and badly argued. And I was thinking earlier, right? Saying earlier, there's two things that really bind people: common interest and also common fear, a common enemy. And we have that now, so we're getting together as an industry. And to me, these are part of the typical humps we've seen in the last 17 years in Bitcoin. Who knows where the decision is going to come out in January? But I'm 100% convinced that we'll get over this hump, right? Maybe it'll be slightly delayed, worst case. So I'm still very bullish on that. As Matt said, in the end of the day, I'm a huge believer, as we all here, in free markets and let the market decide. This is, you know, MicroStrategy is almost a $100 billion company. At some point over 100 billion, a bit lower now. You cannot just ignore that company and its operating business. So, and innovation it's bringing and everything else. It's insane not to think about it as an operating company.
Definitely. Yeah, Sam, any thoughts on MSCI? I'd maybe even love to hear from you as you kind of break it down. What do you think the implications would be if this were to be implemented?
Well, you know, this is one index provider. You know, I think about like the game theory of this. You know, if they choose to not include Bitcoin Treasury companies or companies with Bitcoin on their balance sheets, that doesn't mean other index providers are going to follow suit. And so what they're really doing is damaging their reputation as a neutral benchmark. You know, they should just be reflecting the market, but they are being political and basically discriminating against a reserve asset that they just disagree that corporations should hold. But obviously these corporations feel like it's a prudent reserve asset to put on their balance sheet. And so I think you saw what would happen. So we just saw Vanguard, right, pivot. Well, their business was hurt by not embracing Bitcoin. Yep. And so I think companies that embrace Bitcoin benefit from it, and the ones that don't seem to get hurt. Yeah. So, you know, I think over time, MSCI would probably capitulate because Bitcoin does belong on a balance sheet. Bitcoin is the ideal reserve asset, and I think only more and more corporations are going to hit that 50% threshold over time, especially as Bitcoin appreciates in value and everything else depreciates over time. So, you know, I think it's unfortunate. If it goes through, it might be a temporary sell-pressure as those passive flows removes, but it doesn't mean everything's going to follow suit. And it's just one index provider, and this is a long-term strategy. As Michael tweeted, I mean, their strategy doesn't depend on one index provider. And they just continue marching forward, continue executing the strategy, and providing Bitcoin-backed securities to the market.
Yeah, it's a little bit of a self-owned by MSCI, it seems like. We're coming up on time here, so I'm going to give you guys one chance for final thoughts, starting with you, King.
Yeah, no, like I'm super excited into 2026. I think we continue to see a lot of innovation in the different business models, digital credit. Obviously, where Bitcoin is going to go, and we want to be part of that together. So, super excited. Absolutely. Matt, final thoughts?
Final thought would be that we are in the early days of differentiation that I think Sam and I were talking about, you know, a few months ago. Was there a need for more than one Bitcoin Treasury company in America? I think now we're seeing differentiation, clear differentiation between Strive, Strategy, Nakamoto with what they're doing, 21 as they're getting off the ground. Like there's so many different ways to differentiate, but you actually need a team. The days of just going public and using the ATM and trade at a premium, those days are over. But real teams that can actually think about structuring in an interesting way, I think we're in the early days.
Definitely. Sam, final thoughts?
Yeah, I think you're just going to see so much differentiation across the operating businesses. I mean, even at OrangeBTC, we're seeing local Bitcoin businesses reach out to us with opportunities. We're seeing international businesses reach out who want to expand in the region, reach out to us for potential strategic partnerships. There's ways to differentiate with the balance sheet, with all types of yield generation strategies. And so you're just going to continue to see this kind of develop and evolve over time. And I think it's a good thing for the market. I think differentiation is important to stand out and to build a long-term business. And we'll see, like we said before, we'll learn from each other and what works and what doesn't work, what we can incorporate it into our own business, what we don't want to. And it's really up to the management team to decide what's the best of use of capital and their resources and thinking about risk return. And you know, it's an exciting time. We're in early time. I feel like we're at the frontier. and we're building, and we'll see where this goes. But it's a really exciting time to be building a Bitcoin treasury company.
Absolutely. Yep. And it's a lot of fun. And I appreciate you guys as leaders. And it's going to be interesting to see how things play out, but definitely bullish on everything that's happening. So thank you all for being here. Thanks for joining us for this conversation. And thank you to our panel. I hope you all enjoy the rest of the conference.
Thank you.